You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, natural resource specialist at the Oxford Club. His website, investmentu.com. And check out his best-selling book, The Ultimate Suburban Survivalist Guide, The Smartest Money Moves to Prepare for Any Crisis. Sean, welcome to the show.
Thanks very much for having me on.
We're wondering, what the heck is going on? The Canadian dollar gained 1 cent and a third on the news that oil was up by, I think, $2 or $3 a barrel?
Yeah, well, and all this seems to be related to what's going on in the U.S. dollar, which, fell precipitously, broke an uptrend, shattered its December lows. That was a heck of a move. And looking at that, obviously, I don't know if you want to blame it on the algos or what. There was some somewhat bad economic news, for the U.S. Not really enough to dump the dollar, except I think that maybe the market believes this takes the Fed raising interest rates in March off the table, and also might take it off in June. It isn't just because of whatever little economic news came out today, but also because of what's going on in the world. There's just so much going on where we have Japan cut its rate below zero. We have zero rates around the world. We have China's currency falling out of bed. Europe is in a sad shape. And so I think that now this is just a guess, because let me tell you, we've been looking around the room today saying, do you know what's going on? No one really knows what's going on at this point. But my theory is that no matter what the Fed wants to do, market forces are going to be strong enough that big traders think that the Fed can't do anything. In fact, we could have a situation later this year, I wouldn't say soon, but later this year, where the Fed actually has to ease, just to actually bring things more into line with what's going around the rest of the world. Maybe all of this stuff that I'm speaking about is actually what caused the plunge in the U.S. dollar, which then lit a fire under both gold and oil today. It certainly wasn't the ISM non-manufacturing number. That wasn't a good number, but it wasn't horrible. So if you're looking for an actual fundamental thing in this market, I don't think you'll find it. I think what you really look at is there's some real trader momentum. Too many people are on one side of a trade maybe, or who knows really. But I will tell you this, if you tried to play oil by the fundamentals today, where we saw a massive build in U.S. gasoline stockpiles, I had people who were remaking charts just so they could get a dollar, right? So if you were playing oil by the fundamentals, you would have been steamrollered. It was definitely not a good day to play on the fundamentals. It was a good day to play on the technicals, really.
Does it look like people are expecting a strong driving season this year?
Well, yeah, we've seen U.S. gasoline demand, and of course you can speak about other countries, but U.S. gasoline, the demand is down slightly from last year. I think people are more worried about the underlying economy than they should be. But what I think really doesn't matter. What matters is what the market thinks. It seems the market's getting terrified of something. So this fear is being priced into the market right now. One other thing that's being priced into the market, or has been recently, is that earnings estimates for the first quarter are going down. And so, that has to be priced in, and we seem to be doing that steadily. But we saw the U.S. stock market anyway open up lower, and then the Dow and the S&P both closed up higher. That's actually a powerful reversal move. The NASDAQ recovered some, but still can't really get out of its own way. So, and a split market is also weird. That just shows everything isn't really aligning. So it's a market where I think you need to be careful, but there's definitely some opportunities out here because we are seeing gold push above its 50-day moving average. Now, the last time it did that, by the way, it did not hold. Did not hold. And a few days later, it nosed back over. What I'm waiting to see is where gold ends the week. If it ends the week above its 50-day moving average, I think that'll be a very positive move. And it's already blown out some like overhead resistance levels. I was watching. I can send you links on the stories that I've been writing about gold and silver since January 16th. We've really seen some really bullish moves here, and the miners, at least the good ones that I follow, are really responding to this well. So again, this catches a lot of people flat-footed because people were just, sick of the miners, sick of gold, sick of silver. But that's when oftentimes bull markets can start. So I'm really excited to see what happens at the end of the week. I know some people are diving in with both feet right now. God bless them. I hope it works out. I am a little more cautious, and I really like to see things work out at the end of the week before I go whole hog. But I'm glad to be long, oil companies. I mean, I got two of them that had great days. Glad to be long gold and silver miners. There are some good things to be long in this market, and that's a section that was really working today.
What are those particular places that are good long bets?
Well, I mean, when you look at things like, the basic materials, with rare exception, it was all up today, right? I mean, the refiners kind of got slammed. I mean, we saw Valero and MPC, which is Marathon, and also Tesoro, take it on the chin. PSX, which is one of my favorites, actually managed to eke out a game. But certainly in like anything basic material related was certainly doing well. Independent oil and gas. I mean, look at some of the numbers there. Hess was up over 9% today. Murphy Oil up over 10%. That's some astounding stuff. ExxonMobil, which is a huge company, right? I mean, up over 5%. Now, I happen to be long ExxonMobil. I'm not going to complain. And, hey, let's talk about earnings a little bit, right? We are seeing some companies respond well today, even though their last quarterly earnings were abysmal. Exxon stands out from the crowd in that it actually had good earnings. And, good. Let's say better than expected. Certainly not as good as a year ago. I mean, when you get down to it. But along with the fact that they still managed to make money, they are also increasing oil production, and they have projects already in the pipeline that they're not canceling. So their oil production is going to continue to increase. So that's something that looks really good. Some of the others seem to be really catching some heat and moving up fast, even though they had a terrible quarter in the last quarter. And this price move in oil, as good as it is, isn't actually going to fix that. They really need some more work there. One thing I think that really helps the oil companies is we just heard from Goldman Sachs, they're advising people that they think oil is going higher. Now, they're really famous for having a call that oil was going to go to $20. I don't know what they're thinking. Maybe they're thinking a short-term move higher, then down to 20, or else maybe they think the bottom is in. But their word carries some weight on Wall Street. So if they think that the oil sector is going to move higher, a lot of things that looked really sickly could actually start to really improve in a hurry.
Of course, I do remember the Goldman Sachs prediction that gold would drop to $750.
Well, yeah, they've always hated the precious metal. That's okay. More for me.
Is this good news for Canada, considering that we have a lot of gold miners and oil production here is so key to our economy?
Well, it has to be. I mean, geez, if we can see a recovery in like oil prices, I think that'll really help Canada quite a bit. It really will. And so, I would keep my eye on that, see how things go. Because, certainly a nice move in the Canadian dollar today. In fact, overhead resistance. Nice move indeed. So, look how things go. And it's coming from such an oversold level, right? So you'd expect the Canadian dollar to move up anyway, simply because some people are just going to take profits and go sit on the sidelines. And those people happen to be short. So, I think my friends in Canada could see some well-deserved relief. But let's have this against the backdrop that the U.S. had a huge production build and we're seeing more oil flow out of Iran. And now, one thing that makes the market more bullish is that Russia said that if OPEC members can come to an agreement on cutting production, it would be willing to sit down at the table with them, right? And so that, I think, is part of what's causing this speculation in the market that at least has the shorts covering, because they don't want to be short oil or else oil stocks if that kind of announcement comes out. But the fact is, two OPEC members hate each other. That would be Saudi Arabia and Iran. And other OPEC members are just really, they are in bad enough straits that they just have to pump as much oil as they can. By the way, speaking of Russia, it hit its highest post-Soviet oil production record ever in January. So things aren't slowing down in the world of oil production yet. The market might be getting ahead of itself, and we could see a correction. But certainly this is a welcome move for anyone I know in the industry, and they'd love to see more of it.
And I guess Russia's attitude is if we can't get a lot per barrel, then let's just pump out a lot of barrels.
Well, yes, absolutely. But this has been playing havoc with their economy. Same goes for Saudi Arabia, by the way. They came out with an austerity budget that already doesn't work because things got so much worse so quickly that the worst case scenario they were planning for is not the worst case scenario. So maybe the Saudis have to make a deal. Maybe the pain is enough to force them back to speaking to Iran. But on the other hand, those two countries do not get along. I would say OPEC is broken until I see otherwise. And so we'll just have to see how that actually plays out.
Well, is there any truth that Saudi Arabia started this oil price war hoping to knock out the U.S. shale producers?
Yeah, that's what they hoped. And they did to some extent, the higher price shale producers. Then again, there are places like, say, the Permian Basin where it's still, even at recent prices, economical to drill new wells. And I was reading something the other day, I can't remember who it was from, but he made a fascinating point, which is that with all the money that it takes to drill an oil well in the Gulf of Mexico, millions upon millions of dollars, just extraordinarily high. You don't have to spend 1/20th of that to put a new shale well in, right? And so that really gives the potential for more oil coming on quickly as the price of oil goes higher. We could see a lot of things in those shale basins that aren't working right now. Suddenly they could work, and then more oil could come on, and then we'd have to see what could happen to prices there. So I wouldn't expect any movement in this to be unidirectional. We could see some real violent movement. My recommendation, which I have been telling subscribers anyway, is to buy the best stocks at discounts. And I like stocks that pay people to wait, and I like stocks that can cover those dividends in their cash flow, and I like stocks that even make sense at lower prices. And those are the things you really need to look for if you're looking at energy. With gold, I mean, my God, those poor miners have been beaten flat for so long that, yes, there are plenty of bargains there. If you can find a miner that's actually made money in the last quarter, right, and the price of gold is going higher, well, what are they going to do in this quarter? They're going to make a lot more money. But the ones that will really run will be those that didn't make money, but they're getting close to the point where they might make money. Those are the ones that the speculators will pile into. Just be careful when you buy those kinds of things, because you don't want to be the last guy in holding the bag when prices turn back down. And again, I really hope this isn't the bottom in gold. I really do. That would make for a tremendous year for me, and I think for many of your listeners as well, right? We'd love that. But don't count on anything. Only take small bites, because it'd be great to have bragging rights, and but you don't want to be caught on the wrong side if something goes the wrong way. This is an extremely volatile global financial system at this point. There are nations that have racked up huge debts they can't pay. Their currencies are just falling out of bed. There's a lot of stuff going on that's quite troubling. I think that's one reason why gold is going higher.
Considering that so many people predicted a massive downturn in the equity markets this year, are you surprised that it's taken so long for people to start considering gold again?
Well, there's really kind of a mixed bag on that, because as we've often seen in the past, when stocks go down, gold miners can go down well. They just get sucked along with everything else. But I think what we're seeing in China really kind of adds some support to gold, and that is because those people over there. They're really worried about their whole financial system, and at the same time, they're also worried about their currency, right? So they don't actually want to hold as much paper money as you might think they would. They might want to put that money into gold, and so I think that's a major support for the price of gold right now. And I think when we see monthly figures on how much gold is flowing overseas right now from, say, England and Switzerland and also the U.S. to China, we will be surprised at how much it's actually picking up. I think they are buying a lot of gold right now. Now, of course, this is also their festival season, and because we have the Chinese New Year, and so that always adds into it. And I know things die down after that. So again, there's no reason to go absolutely berserk and start buying gold miners with both hands if you don't own them already. You will have dips in this market. You don't have to chase anything. Just have your shopping list ready for when those dips come. Again, I am watching how gold closes this week because I really like weekly charts. They really remove a lot of the intraday and also even end-of-day noise and just gives me a real focus as to what's going on. If this is the bottom for gold, it's going to be a big trend, right? And so, you can afford to be a little cautious. But I'm more optimistic on gold right now than I have been in quite some time.
I understand, too, some very efficient gold miners have been stockpiling, waiting for prices to go up. No sense selling at a loss.
Right, and so it all depends on what their actual cost of production is. That's also happening in the silver space, by the way, and so we'll see more of that supply come on as well. So, again, that can drag on things, but we'll just have to see how it goes. I just think that it could be a really bumpy ride, but I'm just hoping it's a ride that goes uphill.
Any thoughts on natural gas right now?
Well, natural gas, sure. I mean, that did not do as well as like people were hoping with the big blizzard we had here and stuff, right? I mean, there was a little pop, but not nearly enough, and there's still plenty of natural gas around. And so I would be more bullish on oil right now than natural gas, and I'm not even particularly bullish on oil because of the global supply situation. So, I know of a natural gas stock that you can make money in, and I bet if people look around, they can find ones that can still make money at these prices, but you'd have to be super selective.
Sean, thanks a lot for chatting with us.
It is always a pleasure, and I'll send you the links to my recent stories on, like, silver and gold. Maybe you can put those up for folks. They might be interested in those, might learn something from them as well.
Okay. Thank you very much.
Thanks.
My guest has been Sean Brodrick, Natural Resource Specialist at the Oxford Club. His website, investmentu.com. And check out his best-selling book, The Ultimate Suburban Survivalist Guide, The Smartest Money Moves to Prepare for Any Crisis. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Comments about the show or questions for Sean can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.